Hello, everyone, and welcome to the Community Foundation of Tompkins County Fund Advisors Briefing. We're so happy that you're with us today. We have been holding these gatherings annually for a number of years. Last year, we were forced to cancel this meeting. It was one of the first events we canceled. It was scheduled for March 19th. My name is George Ferrari, and I serve as CEO of your Community Foundation. We're so happy and pleased that you've made time to be with us here today. We have representatives over half of our funds. We have 141 funds here at the Community Foundation, and half of those funds are represented for this very wonderful and special time that we have planned for you together. We do have a couple of different features on Zoom. We have a chat box here where we're able to say hello to each other and share information back and forth. And for the panelists, we do have some time for questions and answers. So for the panelists, you would use the Q&A section here to enter in your questions, and we'll do our best to respond to those. So to get started, I would like to introduce to you Mary McAuslin, who is the treasurer of the board of the Community Foundation of Tompkins County and is chair of our Financial Administration Committee. Over to you.
Thank you so much, George. Hello, everyone. My name is Mary McAuslin, as George mentioned, and I serve on the Foundation board as treasurer and chair of the Financial Administration Committee. On behalf of the Community Foundation's Board of Directors, I would like to welcome you all to this very special meeting. I want to share just a few words about my background. I am a CPA, and I've been very active in the nonprofit community throughout my career, working with many different organizations. Previously, I served on the investment committee for the Berks County Community Foundation in Pennsylvania, where I lived for many years. And I served for about 15 years and learned a lot about community foundations during that time. I also worked extensively with the U.S. Tennis Association and the American Red Cross. I have been a senior lecturer in accounting at the Cornell SC Johnson College of Business for the last 8 years, and that's been the extent of my time in Ithaca, and I've learned a lot about the community through my involvement with the Community Foundation. Serving on the Foundation's Financial Administration Committee has been a great pleasure. The committee provides oversight to all the financial matters of the Foundation. This includes the creation and application of policies and procedures related to the funds and the fiscal responsibilities of the board. We oversee the budget, we monitor expenditures and the financial reports. We also manage relationships with the financial institutions connected to the Foundation, and we oversee the audit and the government reporting obligations. And we also oversee the investment-related policies and the performance reviews and provide oversight of our investment managers. Since my involvement with the Foundation, it's been a great time for growth, and I feel fortunate to be involved and be part of that. As a board member and as chair of the Financial Administration Committee, as we play an active role in overseeing and managing this growth. Since my first meeting with Brown Advisory, I could see that they understood the Community Foundation. Working with James and Amy and Brown Advisory has been a great pleasure, as they truly understand who we are, and this has allowed our relationship to grow in many positive ways. Sometimes the committee has to ask tough questions to ensure that the board understands all of the issues. And our committee brings a varied perspective to the table, and we have great discussions, and Brown has been a partner along the way. We have found them to be very responsive and a true partnership in the goal and mission of community foundations. Their investment returns have exceeded the benchmark for most of the reporting periods, and we are fortunate to have them as one of our partners. The investments we have under management with Brown are focused on the ESG strategy, which screens investments in relation to each company's environmental, social, and governance attributes to ensure that we are investing in sustaining companies. As we have gotten to know each other better, it is clear that we have a shared passion and commitment to putting people first. We both value integrity and excellence. We both celebrate diversity and inclusion, as both organizations strive to step forward and serve in a bigger way. On a personal note, it has been my pleasure to work with Amy and James. They are both very dedicated to providing a personal level of service and to helping the foundation succeed in its service to others. And so I could not be more pleased to be part of our annual fund advisor briefing today with them. And with that, I'm going to turn it back to George. Thank you again for attending.
Thank you, Mary. For folks that may not know, we have a very large, very engaged, very dedicated board with incredible expertise that share the values of the Community Foundation. And I very much appreciate working directly with Mary as our treasurer and member of our executive committee and a chair of our financial administration committee. We have, as a community foundation, many relationships and resources and connections with you as donor advisors, as fund contacts for designated or agency funds, as folks that work with our field of interest funds. And we appreciate and celebrate and hold up those relationships, and the values of accessibility and transparency help us build the relationships that we can use to serve our community. And boy, we've used every one of those in serving our community in this extraordinary past 12, 14 months. The Community Foundation responded to the pandemic immediately by creating a COVID-19 response fund. Many of you contributed to that fund directly and or from your donor advised funds, the interfund transfers. We were able to raise over $400,000, make another additional commitment of resources from donor advised funds, and work with local funders. We convened local funders to meet regularly so we could coordinate and collaborate in the work that we need to do to help our community recover from the pandemic. We also, as many organizations and individuals, have committed, recommitted, and a renewed focus of heart and mind and energy around issues of diversity, equity, inclusion, and racial justice. And these continue through 2021 and beyond. Our board is currently right in the midst of a strategic planning process, and you will learn how we're developing new approaches, new goals, new strategies to continue to serve our community and provide the support that you expect as donor advisors. Our philanthropic consulting services, headed up by Amy Levere, really are there to engage with you to help you develop the plans for your charitable assets. And we want to appreciate and thank you directly for trusting us with holding those assets and for engaging in relationships and conversations for opportunities for you to develop ways of making grants from refund that include how we respond to grant cycles. We're right now in the middle of our spring grant cycle, and many of you can expect to hear from us directly about opportunities that we learn from those cycles that might align with your charitable interests, that you might want to make a grant to support those grant applications. Our next big event coming up, we'll talk to you a little bit more about this, but June 17th is our annual gratitude gathering celebration. You'll learn more about our developments and all of the efforts that I just mentioned. Right now, it's my pleasure to introduce to you today's speakers, Amy Cito and James Steerhoff. From Brown Advisory. Amy Cito is a partner and endowments and foundations senior advisor at Brown Advisory. We were excited when we found out that prior to joining Brown, Amy was, among a variety of roles, chief operating officer at the Baltimore Community Foundation. And there's nothing like someone who has the lived experience of knowing what a community foundation is and the relationships we have in communities, like someone who has that experience. So it's so important to our work with Brown Advisory. James Steerhoff is a partner and a portfolio manager and serves as a member of the Sustainable Investing Leadership Team. In these past years of working together, and it's been slightly more than 3 years now that we've engaged with Brown, we have been pleased with the experience and ideas that James brings to us at regular meetings of the Community Foundation's Financial Administration Committee. So I think you're in for a real treat now. We're very happy and excited that James and Amy have agreed to join us all today to share with you a lot of information about their approach to socially responsible investing. Over to you, Amy and James. Thank you.
Thank you so much, George. It's really a great pleasure to be here today, and I hope you all can hear me okay. I love community foundations and love being in the space again. So just to do a quick overview of our agenda, and James will advance. Great. We're going to cover who is Brown Advisory, and then we're going to talk a little bit about what is the ESG pool, who manages the money, and how are these dollars being invested. And then we will cover the performance of the ESG pool as well. So on the next page here, Before I get started to give an overview of the firm, I'd like to turn to our DNA. And I think this is what makes the partnership special, as Mary has said before. We really believe in our shared values and purpose. Our 4 C's that are stated here: client first, colleague driven, community focused, and culture led, are the values that we hold ourselves to in delivering a positive and material impact in our clients' lives. And I think this is very much aligned with the Community Foundation's mission to enhance the quality of life of all who live in, work in, and love Tompkins County. So the next page gives you a quick overview of West Brown Advisory. We are a global investment and strategic advisory firm, independently owned since 1998. All 750 colleagues are shareholders of the firm, and together we own 70% of our outstanding shares. No one person owns more than 5%. Our client retention rate over the last 10 years has been 99%. The endowments and foundations practice, to which James and I are dedicated, serve over 200 nonprofit clients. And community foundations are one of the key sectors that we are committed to serving well. We have a sustainable research team, which is led by a woman chief investment officer who helps to set the tone on mission-aligned investing. The next page gives you a flavor of our diversity, equity, and inclusion effort. And I would say that our broad efforts started 5 years ago when our CEO made a personal commitment to embracing diversity and inclusion as a cultural and client imperative. We are confident that investment teams made of diverse perspectives and also make room to ensure that voices are heard will deliver better results for our clients. To give you a few examples, we are very proud of the fact that we score 100% on the Human Rights Campaign Foundation's 2020 Corporate Equality Index. And we are recognized as one of the best places to work for the LGBTQ+ community. James is going to talk a little bit more about our diverse manager initiative. We are holding ourselves accountable in our manager due diligence and research to make sure that we cast a wide net and find the best performing managers that are available to us, regardless of systemic bias. Another thing that is very personal to me is the creation of colleague resource groups. We have 5 colleague resource groups as the firm, one for Asian and Pacific Islander colleagues, another one for Black and Hispanic colleagues, the third one for women, there's one for LGBTQ+ colleagues, and then one for veteran, military, as well as first responders. We know that the finance industry overall is not considered very diverse demographically, and we have to hold ourselves accountable. So the next page gives you some pie charts on how we are doing. We actively and intentionally recruit diverse individuals to join us at the firm, and we also support the growth of our female colleagues and colleagues of color. We know we are not there yet, but a 1,000-mile journey starts with one single step. So we'll continue to improve upon how we do. As far as the board of directors level is concerned, our board has adopted a formal policy to reduce the board term and make room for opportunities of diverse individuals. As you can see here, we still have some work to do, but our board of directors is fully committed to bringing the diverse perspectives as to the decision-making level of the board. So James will talk a little bit more about how we embed diversity, equity, and inclusion in our investing process. So now we'll turn it over to James, and I'll jump back on when it's time for Q&A. Thank you.
Great, thank you, Amy, and thank you all for the time. It's, I think, somewhat purely coincidence, but also somewhat fitting that we are joining you all today to talk about the ESG pool on what happens to be Earth Day. So happy Earth Day to everybody today. So I wanted to start off with a couple examples. What if I told you that we could invest in a security that seeks to address the homelessness crisis in California, specifically a security that helps finance low-cost housing facilities with mental health services, and at the same time, generate an attractive market rate return? What if I told you that we could invest in a security of the second largest producer of solar power in North America? And the proceeds from that investment would be used to finance energy efficiency initiatives and electric vehicle charging infrastructure in the state of New York. And once again, you could generate a very attractive market rate return from that investment. Those are the types of things that we're investing in within the balanced ESG pool that we manage on behalf of the Community Foundation. And those are both examples of individual bonds that we purchased within our internally managed sustainable bond strategy. And as Mary, I think, teed up nicely, the ESG pool's purpose is to align with the mission and values of the Community Foundation as closely as possible, while seeking to generate the best returns we can and beat traditional blended benchmark of equities and bonds over a full market cycle. And it's exciting to be able to do that while investing capital in things that feel good and align with again what matters most to you at the Community Foundation. So this is a busy slide. I would encourage you to read it top to bottom at your leisure as a follow-up if you'd like. But within this portfolio, we are using a combination of different strategies, some traditional strategies, but our focus is to use as many ESG-oriented, sustainable strategies as we can, while also employing very thorough screening across all of the investments in the portfolio to monitor our exposure to potentially controversial areas. And in a nutshell, what we mean by ESG strategies are funds and strategies run by investment managers, either internally at Brown Advisory or externally around the globe, that are incorporating environmental, social governance research into their investment process, using it to help inform them of potential risks that might exist in an underlying company. Is a business thinking about potential environmental liabilities that exist? Are they engaged in thinking about their board diversity? Are they conducting racial equity audits within their organization? Really viewing the ESG strategies as those who are incorporating this additional layer of defense in their investment process. Sustainable strategies, we would sort of say, take it to the next level. They're incorporating ESG research, but they're also trying to find businesses that they think are just better businesses because they have what we define as a sustainable business advantage. So perhaps it's a company with a manufacturing process that's very keen on quantifying and reducing the amount of natural resources or water that goes into its manufacturing process, in part because it's the right thing to do for the community in which it operates, in part because it's better for the environment, and in part because it actually also saves input costs, and those savings flow to the bottom line and make it a more profitable, better run, more attractive business in which to invest for the long term. Our teams internally, and as well as our partners outside of the firm, are thinking that way and finding wonderful opportunities to invest in across all industries and geographies that are incorporating this layer of research, which we think helps lead them to a differentiated perspective on many businesses in their portfolios. So today, about 85% of the total ESG portfolio is in these sustainable and ESG strategies. The remainder would be in For instance, a short-term bond fund or a value-oriented strategy where we don't have a sustainable option, but one where we use our sort of X-ray tool, if you will, to dig in at the holdings level to ensure that they're not investing in or holding companies that are in violation of the values that we hold, dear to us and you at the Community Foundation. This is something that we track and monitor on an ongoing basis, and always want to make sure that we're very, well within our alignment goals in the portfolio. With whom are these dollars being invested? You've already heard a little bit about some of the work that we're doing at the Brown advisory level, and we're working hard to get better and get a better understanding of where we are from a DE&I standpoint, so that we can transparently measure and share our progress over time. And frankly, we're working very hard to get that same level of detail from our managers. We want to have a better understanding of who is investing our clients' capital, and to see if there's progress over time as far as increasing the diversity of those managers, of those investors. We want to be aware of any unintentional bias in our manager research process, and I think are really just trying to embrace this continued learning environment that we have at the firm with our managers as well. I think David Swenson, who manages the Yale Endowment, sent a letter to their 70 or so equity and fixed income managers last year and told them DE&I is important to us at Yale. It's important to us within our portfolio. We'd like you to know that it's important. This will be a criteria upon which we evaluate you, in addition to your ongoing performance and risk management approach. And we expect to see progress on this going forward. As Amy said, we can't just snap our fingers overnight and see a change, but we do want to make sure all of our managers know that this is important to us and continue to widen our aperture so we find other high conviction, diversely run strategies that we can incorporate in our portfolios to ensure we have the best thinking and best performance results. We recently contracted with a third-party data analytics firm that aggregates diversity data within the investment manager space. And that's something we're excited to use, again, to help us quantify and establish a baseline in current portfolios so we can better track progress in the future and how things evolve. Today, I think it's worth noting, we're pleased to report that about 60% of the strategies in the ESG pool are managed or co-managed by a female portfolio manager, one of whom is Latinx. So we have some data at our fingertips today and are encouraged to get more very shortly. Where are those dollars being invested? I've given you a couple examples. Internally, we're very keenly focused on tracking this as well. So I have included two snapshots, one on the left-hand side that is representative of our sustainable fixed income strategy, and on the right-hand side, our large cap sustainable growth fund, which is managed by Karina Funk and David Powell. It has a 10-year track record investing with this sustainability lens. The sustainable fixed income strategy is managed by our colleague Amy Howder. Again, fully integrating a sustainable lens and really focused on the use of proceeds that bonds are raising and what types of projects they're funding. So as you see, we have a very, I think, wide range and diversified exposure to different impact categories, from affordable housing to clean energy to health and wellness. And it's wonderful to know that, again, our dollars are going towards good investments, but also things that are improving the lives of many in our society. Figured a couple more examples might be helpful. As you might have read last year, the Ford Foundation issued bonds, and we purchased those bonds in our fixed income portfolio. And the funds they raised were used to make grants over and above the Ford Foundation's normal grant making efforts to help build resiliency in the nonprofit sector, knowing full well that during the COVID-19 era that we all found ourselves in, many nonprofits found their revenue sources being cut. So they stepped in to help bridge that gap. We were very excited to make an investment in those bonds and to help and do our part in bridging that gap as well. On the equity side of things, I thought Ball Corp could be an interesting company to touch on briefly. This company is held in the large cap sustainable growth fund. You might be wondering, why are mason jars such a great growth opportunity? But interestingly enough, Ball Corp is actually one of the leaders in the manufacturing of aluminum cans. And aluminum cans have some interesting attributes that our team uncovered during their due diligence process, and has really found that Ball Corp is benefiting from a number of shifts in consumer demand. Aluminum cans compared to glass bottles or plastic bottles carry two really appealing attributes. One, they're much lighter. So from a shipping standpoint, they reduce the weight of cargo being shipped, and thereby reducing shipping costs and the associated fuel that goes into that. Also, aluminum cans can be recycled infinitely. So it's very positive from an environmental standpoint, and there's an increased demand for that type of product, as we all know. It's also interesting just to reflect, if you go to your local store, I'm sure the craft beer phenomenon is known by most, and there's a big demand for this product, in particular from things like that. So this has been a very successful investment because of those demand drivers the company has benefited from. And it's also just been a wonderful story on the environmental side of things. I think it's really important to answer the question, how has the ESG pool done? It's great that we can invest in things that make us feel good and align with our mission and our values, but are we giving up anything by doing that? And I hope the numbers speak for themselves. I'll touch on some of these briefly, but the answer is you can have your cake and you can eat it too. And in fact, your performance has frankly been better because of the added element of ESG research and sustainability, DE&I, being incorporated into the strategies and portfolios that we are investing in within the foundation's pool. These numbers are as of March of this year, and you can look back over the trailing quarter, 1 year, 3 year, and back to our inception with the team at the Community Foundation. And as Mary pointed out, the portfolio has delivered strong outperformance within the fixed income allocation, the equity allocations, and in aggregate above its blended benchmark that's comprised, again, of just traditional bonds and stocks that we measure ourselves against. I think it's also worth noting in this blue footnote below, which is probably too small to read, but as of the end of the year, we took a look at our pool relative to all community foundations who participate in a broader reporting effort to see how we stacked up. And in 2020, the portfolio returned just under 18%, which was well ahead of all participants who participated in the community foundation data set that returned on average 13.2%. And then when looking more closely at smaller community foundations with under $25 million of investable assets, they returned about 10.3%. So I'm really pleased to see that we're doing well relative to our traditional benchmarks, but we're also really doing well relative to our peers in the community foundation space. So with that, I think I will stop sharing my screen and pass it over to George, who will open it up for some Q&A.
Thank you, Amy and James, very much. A lot of very good information. We've had a couple of questions come in already. We'll also have a poll that we'll ask you to take. It's a one question poll with a bunch of answers you can respond to. But one of the questions we have is, can you provide a copy of the specific ESG policy for us, for the Community Foundation? And that's embedded within our investment policy statement. But the specific question, and James, you might be able to answer this off the top of your head, does the portfolio invest in oil and gas stocks and industries that support them?
Great question. The answer is no. Within most of these strategies that we're using within the total portfolio, I mean, inherently because of the ESG lens that those managers are incorporating into their process, they strictly avoid oil and gas. The exception would be if we are using some more indexed-like strategies where we don't have the ability necessarily to screen everything out. There is some minimal exposure, but again, that's what we're trying to use the sort of portfolio X-ray tool for, just to drill in and again make sure that exposure does not tick up. But I hope that answers the question, George.
Great. I think that it does. And Mary, our committee might want to put on our agenda sometime this year, taking a look at what's going on in our own statement, our investment policy statement, because we try to look at that every year, every other year. It's such a dynamic field. It probably makes sense for us to consider that and whether or not we come up with a separate standalone statement around ESG or continue to embed it within the policy, something that the foundation should be looking at. Another question is, given ESG has been growing and it's also been around for a while, people are curious whether there's an age demographic that you're seeing in ESG investors. Is there something you can talk about demographically about the typical or growing investment interest in this as a sector?
Yeah, great question. And in addition to working with many nonprofits, I do also work with a number of families and individuals. And I think two sort of more obvious statements I would share are younger folks definitely tend to care more about sustainable investing on a relative basis. Frankly, however, within the nonprofit space, I don't know that Amy and I have a client with whom we work that has not asked the question or invested in something today that is mission aligned, depending on that client's particular mission, which might be environmentally focused or otherwise. That being said, as the industry continues to evolve and there's more and more data available, such as our large cap sustainable growth funds 10-year track record, where they, Karina and David have really done a phenomenal job. I think more and more just general investors are waking up and seeing that this is just a good way to invest. Whether it aligns with your beliefs and values or not, these are good funds, good investment strategies, and excess returns might be available.
Great. Is there a movement in ESG strategies to assess how well the firms you're investing in are doing on their own diversity initiatives and allocate funds toward those firms that are making good progress on those characteristics?
Great question. So prior to being a portfolio manager, I worked in our external manager research group, helping to find, vet, and evaluate different managers in different firms. And
Hmm.
I was always uh, wrestling with that question myself. It's
Hmm.
really easy to say, hey, generation investment management is one of the gold standards in sustainable investing. It's co-founded by Al Gore and David Blood. All they do is sustainable investing. Their performance is lights out. Let's go with them. And I think, that's been a very good strategy for those who've been able to invest with generation. However, you don't want to miss out on firms, investment teams, and strategies who are perhaps earlier in their curve and are improving rapidly. So we always tried to make sure we had a broad net that we would cast, and then monitor those firms and those strategies very closely to see, again, if they were putting their money where their mouth was, and we saw measurable change and improvement. So um, I think you do want to keep a close eye on that. Um, that being said, within the industry, while there has been much progress and many more strategies launched over the years, you do have to be somewhat cautious of some of the more greenwashing approach
Hmm. Hmm.
that might exist. Plenty of firms have realized this is a growth opportunity. There's a potential to raise a lot of assets if you have ESG funds, and we want to make sure the firm actually believes in what they're putting out there in their marketing material.
Hmm. And I think, as is true in many communities, this is a community that thinks deeply and has strong feelings around issues around ESG. And if you talk to three people, you might get six different ideas over the course of a day about whether it's a good ESG approach or this one is not, looking at the same set of data. So being an organization, a foundation that holds assets for multiple people is important for us to consider the broad expanse of ideas about that. I'm going to ask two more questions, and then I'm going to ask Amy Amy Levere to do our poll. This might be an Amy Cito question. I'm not sure. I'm interested in your experience with other community foundations as well. Over the past few months, there's been a surge in interest regarding cryptocurrencies. Is this something that we are evaluating as part of an ESG investing strategy? And/or Amy Cito, do you know of other community foundations that have addressed this dynamic, let me use that word, potential investment strategy? Our policy does not speak to this right now for the Community Foundation of Tompkins County.
So George, I've been talking to my colleagues at FOG. FOG is the Community Foundation's Finance and Administrative Officers Group. So a lot of CFOs and CPAs like me and Mary belong to this group. I have not seen, I've seen like talks about it, but I have not seen actual allocation to cryptocurrency. The conversations are largely focused on, if a donor wants to give us cryptocurrency,
Mm-hmm.
how do I go about accepting that and also liquidating
Yes.
the gift? So I would say that if this is something that the Community Foundation is thinking about, it's important to revisit your gift acceptance policy
Mm-hmm.
and also look at your investment policy statement and find the best way to sign up for an account with a reputable company and to be able to accept the gift and also liquidate a gift in a timely manner.
Yes, very good point. We are revising our gift acceptance policy this year as well. So one more kind of question, and then I'll ask Amy Levere to do our poll for now. Someone would like to know what the minimum investment threshold is. And I should also mention Community Foundation has always had an ESG, what used to be called an SRI, Social Responsible Investing Option. But we haven't always worked with an organization or a company like Brown that's been so well invested in this approach. But I'm assuming this is an ask for an individual investor. Certainly, as being connected to the Community Foundation, your assets are bundled all together and we invest them as a whole. So James, is there a minimum investment threshold for ESG?
For Brown Advisory?
For Brown Advisory, right.
Sorry. So to invest in some of our individual funds that we manage, any of those are available at all the large wirehouses and brokerage platforms for typical low minimum of $5,000 perhaps.
Right.
More broadly speaking, to be a client of Brown Advisory, we tend to have on the individual and family side a focus on the higher net worth and spectrum there, but certainly open to having any conversations where we might be helpful in answering the questions in more detail offline, if helpful. Yeah.
Great. Thank you very much. And for those folks that are donor advisors that don't realize it, when you started your fund with us, you gave us a recommendation for what asset portfolio you'd like us to hold your charitable gifts. And you might, through the course of this presentation, consider whether or not you might want to change that or alter that in some ways. If you're not currently with Brown, you might want to think about investing with the ESG portfolio or doing a percentage of your assets. So that's part of why we're bringing you this information as well. But you as an individual charitable investor with us benefit from the size of the foundation. So you have access to investment opportunities that you may not typically by yourself. And this is often, you've heard us use the term philanthropy magnified. That's one example of how we magnify philanthropy. So Amy Levere is going to put out a poll now. This is anonymous. No one will know your answers. But what actions would you consider taking by the end of 2021? It's a little hard for me to even believe we're at April 22nd. So we're a good 4 months into the year already. But as you're thinking about 2021, and you can choose any or all of these, planning for charitable giving to occur at the end of my life in terms of a legacy gift or a planned gift, volunteer as a grant review team member or other volunteer role with the Community Foundation, add additional resources to your donor advised fund or open a fund. By the way, you can have more than one donor advised fund. You don't have to pick just one donor advised fund. Increase grant recommendations toward critical needs from your donor advised funds, and or move some assets into the ESG investments. So take a moment now and think about that and respond to us, and we'll report to you what your aggregate results are. Again, it's totally anonymous. And Amy Levere will report back to us. We still have a little bit of time for Q&A. So as you have additional questions, this is not your only opportunity to ask those questions. You might tonight at dinner say, oh, why didn't I ask this? And yes, I believe you can choose more than one. Yes. Why didn't I ask this? Or I should have thought about this. So, we as your Community Foundation are very accessible to us. You can give Amy Levere or I a call or an email, and we'll be happy to advance those questions forward for you. So this is the one poll question we have here.
We do. We have people who are busy and active in our community, not surprising. So I'll just give a couple more seconds and we'll close the poll, and then we'll all be able to see the results. And again, just as George said, these are anonymous.
We do have another question. Do we invest in nuclear energy, or are the risks too great?
I don't believe we have any direct exposure to that today, but it's a great question. And
Yeah.
I just finished reading Bill Gates's book on how to solve a climate disaster, and that was a topic in the book. It certainly can be effective, but is higher risk and carries the not in my backyard element to it. So
right.
TBD. And while you're collecting responses, I'll just offer one other anecdote on the crypto question. We don't invest in any cryptocurrencies in the portfolios that we manage today, but from an ESG perspective, I would offer we do think the blockchain technology is very interesting and can be disruptive, and we do have investments in the private equity end of the spectrum. But on an energy standpoint, ESG standpoint, the amount of energy that goes into mining Bitcoin in a year on a global basis is about the amount of energy that the Netherlands consumes in 1 year. So
Wow.
it's not super ESG friendly today. If the role of alternative energy sources increases in the future, that could shift, but throw
That's
that out there.
interesting to think about it that way. So we do have some poll results. About a quarter of you both are interested in planning for charitable giving to occur at the end of your life. And we have no wrong door into the Community Foundation, but I do want to let you know that Nancy Masici is our Chief Development Officer and would be happy to be a point of contact for you to kind of work with your professional advisors, estate planning attorneys, tax accountants, wealth advisors around that category. And slightly more than a quarter of you are interested in volunteering as a grant review team member, and that is headed up by our Chief Impact Officer, Janet Kotracha. Adding more money to your donor advised funds, about a third of you, increasing grant recommendations, 40%, and 70% of folks are interested in moving some assets into ESG investments. So I think this is certainly something that many people are thinking about, talking about, considering, and we are happy to provide information and resources and ways for you to achieve that particular goal as you partner with us and trust us to manage your charitable assets. Thank you very much. We have time for one or two other additional questions. I'm going to ask both James and Amy Cito to get out your crystal ball and say 5 years from now, when we take a look at ESG investing, where do you think we'll be? What will the next 5 years bring us in this space? It's changed so much already in the past 5 years.
I would say ESG investing will just be mainstream investing. And if you're trying to be a good long-term investor, I think the rest of the industry will have woken up and realized that just incorporating this into the research process is additive. So you might have less labels on strategies.
I may add that you will probably see more diverse perspectives and voices in the boardroom and also on the investment teams. This is something that a lot of my community foundation clients are thinking about, is to how to continue to diversify within and also in their investment portfolio.
It's so important for a charitable organization like a community foundation to understand that every decision we make has an impact on our communities, however we define what those communities are. We talk about people who live in, work in, and love Tompkins County. So your residency might be somewhere else, but there's still a connection to communities here. And it is, I think, a little surreal to think about making grants that solve a problem, but your investments are supporting for-profit organizations that are, in effect, causing some of that problem. It's sort of, it's a little schizophrenic to think about things that way. So we're trying to, alignment is a big term and concept here as well. So as we're beginning to wrap up the question sections, I wanted to give James and Amy Cito any last words here to share with us. We very much enjoy partnering with you and collaborating with you in this space, and the skills and expertise that you bring to us and allow us to engage with our donor advisors as well.
I could probably speak for James too, that we appreciate this relationship very much. And it's to us, it's not just serving in a client relationship. We are personally and professionally aligned with what you're trying to do. I do want to let you know, George, I don't think I've told you before, we are starting to be composting at our offices. So something that we're very excited about. No more wasted food goes into the composting.
That's good to hear.
Yeah, no, I would echo that, and just, I think when Amy and I come to work every day, we view ourselves as an extension of your organization, and I find working with folks like you, like your community foundation, to be some of the more rewarding part of my day and year. And we've got an investment committee meeting next week that's virtual, and I'm hoping that the one in the fall, we might be able to sneak our way up to Ithaca to enjoy the foliage in person again.
That'd be great. Yes, yes. James is going to be involved with us next Wednesday at our Financial Administration Committee. So I want to thank you both for being part of the ongoing relationship building and education and exploration opportunity we have with the donors who make all the work of the Community Foundation possible. You know, one other way that we're looking about quote unquote impact investing is another way to think about this or talk about this, is that you may not realize we had a donor give us a very generous gift of $100,000 with the designation that we use that to invest in the City of Ithaca storefront recovery program. So this is money that this is not a grant, this is money we're investing in local economic development and recovery for organizations, whether they be retail or hospitality or restaurant, that have been hard hit, and helping them have assets to recover in a low interest environment rate that would eventually come back to us. So that's another example of how community foundation can use our assets to do this kind of work. It's not only grant making. So I have a couple of wrap up comments to make for folks, and I wanted to bring you up to date on a couple of decisions that our board made in February of this year in recognition of pandemic recovery concerns and increasing our ability to advance racial justice and center a multiracial lens in decisions that we're making. So typically, if you have an endowed fund at the community foundation, the spendable rate refers to the amount of money that's available for you to with which to make grants. Typically, that's in a pretty tight range of 3 to 5%. It's almost always been about 4%, but because of the generous gifts that you as donors have made to the community foundation, and because of the investment returns that Brown has enabled us to achieve in 2020, we saw it possible to increase that spending rate to 5%. And that makes additional money available to our community in terms of grant making. So that was a major move that the board approved in February. We also looked at all of the assets that the foundation has in sort of operational funds, whether that be our operational endowment or our discretionary grant making endowment, some of the money we hold in various non-donor advised funds. And we decided to reallocate $5.6 million of assets into the ESG SRI pool managed by Brown. And that more than doubles the assets that are held at Brown. We felt this was important for our mission alignment, for taking actions that advance racial and social justice, and also, you know, tertiary or fourth reason wise, being about the investment returns were much better. We also, the board approved a budget that increased by 300% to $10,000 our operational spending for our own work around diversity, equity, inclusion, and justice improvements, assessments of decisions we make and work that we do, and looking at how we engage a diverse community and holding ourselves accountable. So putting some real money into a budget to advance that. One of the ways that we're working on this is we've hired a consultant writer who is a woman of color and someone who runs a Black-owned business to help us develop some of our communications externally on the website, e-newsletters, media releases, to center and focus positive messages around racial justice. So those are just 3 examples of things that we have done and will continue to do. We think we'll have more to share with you at our June 17th annual gathering and celebration. I also want to share with you 2 examples of what fund advisors and donors have done. Oh, here's some 2020 by the numbers. So we were able to raise more than $3 million in 2020 thanks to your generous gifts. The largest number of gifts ever. 1 in 3 gifts went into the COVID-19 response fund. And I love our gifts range, right? $3 to $500,000. Our assets are $25.2 million in 140 funds. We talked about that. We had a very large amount of grant making of $2.3 million in grants, 572 numbers of grants to 229 unique grantees, and spread across a whole variety of sectors within the mission-driven world. And we looked and assessed in 2018, 2019, and 2020 at which grants we made that had some form of a social justice strategy that included racial justice, rural services, resource equity, et cetera. And we're happy to see that about 79% of our grant making over the course of that year had something to do with social justice written broadly. And we also looked at how we held assets, and about a quarter of our assets are dedicated toward organizations that are dealing with racial justice. So we're trying to not have that be where we stop. That's where we start, and we set benchmarks from that. I wanted to share with you a couple of next steps. I've already mentioned to you that we're in our strategic planning process. We also have a grant cycle coming on right now, and you'll be hearing from Amy and Janet about grants that are coming in that you might want to pick up or support or nominate for grants from your funds, and be happy to do that. And then also announcing today a relaunch of a process we did in 2019 under leadership of Nancy Masici. We have an anonymous donor who is supporting us with some general operational dollars. We're calling it a growing promise. This is a challenge to increase the number of known plan gifts that we have. People who have indicated to us that they've made a circumstance available in their will or a beneficiary designation on an IRA for the community foundation. So if you're thinking about making changes to your fund based on the information you have here, or you'd like more information, I'm happy to have you contact us directly. Our offices are still physically closed to the public, but we are all working. We're working virtually and remotely. We're accessible by email, and we look forward to a time when we can come together and meet in person. So in terms of setting an appointment, talking over the phone, here's the contact information for all of our staff here, Janet and myself. Jesse's our administrative coordinator, Amy and Nancy. I want to thank Amy Levere, who put this entire event together. Thank Amy Cito and James Steerhoff again, and encourage you to stay connected with us. Let us know what's happening. Let us know how we can continue to support your philanthropic goals. We will be in contact with you electronically with a recording of this particular event and the slides from Brown Advisory's presentation. So thank you for making time to be with us. Thank you for trusting the Community Foundation to hold your charitable assets, and for engaging in meaningful conversations to improve the quality of life for all in Tompkins County by inspiring and supporting enduring philanthropy. Take care.